A prominent group of investors, including a number of top-tier investors, used to support the Tesla short sellers. We're referring to the big short investors Jim Chanos and David Einhorn, both of whom are billionaire investors. But the Tesla short sellers appear to have vanished after the stock's exponential surge from about $36 per share to over $1,200 per share. The years of turmoil between Elon Musk and the short sellers were the longest and most unsuccessful short in history. So what transpired, and where are the short sellers now? Tesla was previously the most shorted company on the NASDAQ because investors were massively betting against the electric automaker. However, as short interest in Tesla reaches an all-time low, it appears that most of these investors have given up. Elon Musk, the company's CEO, has frequently advised against betting against Tesla in the stock market. He even went so far as to call it the next-level short burn of the century, which sort of occurred in 2017. Tesla's stock had a significant run-up, and those shorting the stock have lost tens of billions of dollars overall. The people who sold short on Tesla weren't simply some unfortunate fund managers. They were a gang of strong guys who came dangerously close to bringing down the company. The conflict between Elon Musk and the Tesla short sellers is a private one. Elon Musk has stated that short sellers should be outlawed since they destroy value. Having stated that, we must discuss David Einhorn, the most infamous short seller of them all. In 2016, when he initially began shorting Tesla stock, Einhorn referred to Musk as a self-promotional CEO. At the beginning of 2016, David Einhorn's assets under management, or AUM in short, were more than $15 billion. That is a significant sum, and for a good cause. With a history of producing returns that were above average, Einhorn had a remarkable track record. To Einhorn's surprise, the beginning of his Tesla brief signaled the end of his professional life. Einhorn made his great prediction that Tesla would collapse in 2019 at CNBC's Sohn conference. He made it apparent from his presentation of Elon Musk's remarks that he believed Musk would make a mistake. After a few months, Einhorn charged Musk with serious fraud. Elon Musk finally had enough and began to respond to Einhorn. Even more, Elon referred to him as Mr. Unicorn. He addressed it as, "Dear Mr. Unicorn," a fabulous name, by the way, "we have reviewed your Greenlight Capital Q3-19 investor letter, in which you accuse Tesla of several unfounded things. Given the losses you incurred from Tesla's profitable third quarter, as well as the fact that you've had several poor performance years and a dramatic decline in assets under management from $15 billion to $5 billion, it makes sense that you'd want to avoid further embarrassment with your investors. We are sorry for you." Musk went on to elaborate on Tesla's most recent advancements before offering visitors a tour of the company's offices and production lines. The letter was then signed off with, "Regards, Elon Musk." After Tesla's rapid growth, Einhorn said his short Tesla position was his largest loser in 2020. In 2020, the value of Tesla stock surged by about 8 times, plainly to Einhorn's fund's detriment. As if things couldn't get much worse, Einhorn's career may be coming to an end with Tesla's recent upward movement. According to the most recent SEC filing, Einhorn's assets under control were only $1.5 billion, but they're probably considerably smaller now. Remember that he had $15 billion to work with when he first shorted Tesla in 2016. Thus, his current AUM is only a tenth of that amount. Jim Chanos, a hedge fund manager, is another of the most well-known Tesla short sellers. When he bet against Enron, one of history's largest frauds, Chanos first started to earn popularity. Chanos was in charge of managing more than $7 billion after the 2008 financial crisis when practically everything crumbled. Chanos was highly underwhelming in the decade that followed, which was a shame. Due to Tesla's value, Chanos declared in 2015 that he was shorting Tesla stock. By 2018, Chanos' assets under management had dropped to $2 billion from his previous AUM of $7 billion. Chanos' fund kept collapsing even as the market kept rising. His fund only has $932 million under management at the end of 2019. Two-thirds of Chanos' short trades were profitable previously, but that number is currently only one-third. The exponential growth of Tesla was the final straw for Chanos. Chanos declared that he was still maximum short on Tesla in the midst of the pandemic. While Tesla stock was declining at the time, everyone was aware of how things turned out in the end. Chanos' audacious claim did not turn out nicely. By the end of 2020, the value of Tesla stock had virtually doubled. That concludes today's video. Thanks for joining us till the end, and we'll see you in the next one. Goodbye.